Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 28th February 2026. The government is in talks with smartphone makers for a new incentive scheme as the current production-linked incentive ends next month. Officials are considering an exception to the general rule of single-round incentives due to changing circumstances, including the zeroing of fentanyl tariffs on China and a persistent manufacturing cost disadvantage for Indian players. Netflix has withdrawn its bid for Warner Bros. Discovery, deeming the acquisition financially unattractive after Paramount Skydance raised its offer. Paramount's revised $31 a share proposal is now considered superior, though the deal faces potential antitrust scrutiny and potential concerns. National Asset Reconstruction Company of India, or NARCL, plans to bid approximately Rs 900 crore for Videocon Oil Ventures stressed debt, which has admitted claims of Rs 30,640 crore. After months of negotiations and addressing complexities, the bad bank has formalized its offer, potentially leading to a Swiss challenge process. India's financial watchdog NFRA has inspected 10 major audit firms. These include EY, KPMG, Deloitte, PwC, Grant Thornton and BDO. Findings will be released by March end. Inspections focus on audit quality and governance. Some firms show improvement in processes. However, areas like audit independence still needs attention. The government has released draft form number 170 prescribing a comprehensive format for submission of valuation reports under section 514 of the Income Tax Act. The draft form aims to standardize reporting requirements for valuers and ensure greater transparency, documentation, and uniformity in asset valuation proceedings. The proposed form lays down an extensive structure covering personal details of the assessee, credentials of the registered valuer, and detailed schedules for valuation of different categories of assets. Draft form number 170 under section 514 represents a major procedural reform in asset valuation reporting under the income tax framework. By introducing category-specific schedules and technical disclosures, the government aims to create a transparent and standardized valuation ecosystem. Stakeholders, including registered valuers, chartered accountants, and taxpayers, should review the draft carefully and prepare for enhanced reporting requirements once it is officially notified. Banks are stepping up their focus on green deposits, with public sector lenders accounting for the bulk of collections so far. However, growth remains at a nascent stage and total amounts mobilized are still small compared to the overall deposit base of the banking system. Green deposits are a type of fixed deposit that allows investors to invest money in sustainable and eco-friendly initiatives. Any regulatory dispensation such as relaxation in cash reserve ratio requirements for green deposits, if granted, may improve the unit economics of such deposits. Banks have also stepped up financing to green projects, increasing credit exposure to renewable energy, electric mobility, sustainable infrastructure, and other climate-focused sectors, aligning their portfolios with environmental goals. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.